All right, so we've got this mountain of research about alternatives. You've been digging deep, especially in India.
Yeah, it's fascinating. All these reports, data, everything pointing to a really exciting potential in India.
Right, like a whole world opening up, moving beyond the usual stocks and bonds.
Exactly. It's all about alternative investments. Private equity, real estate, infrastructure, even lending. Stuff you don't hear about every day.
And that's why it's so interesting, right? I mean, everyone wants those high returns, and it's not always easy these days.
You got it. But why India specifically?
That's what I'm wondering. What makes their scene so different?
Well, India's economy is really on fire right now.
You mean like one of the fastest growing economies globally?
Exactly. And they're aiming for a $10 trillion economy by 2035.
Wow, 10 trillion. Ambitious much. But I see what you mean. That kind of growth, it's got to be attracting investors like crazy.
Especially those looking at emerging markets. It's a huge draw.
Okay, so I'm looking at chart 1 here. The IMF is projecting 6.5% GDP growth for India over the next few years.
It's impressive.
And table 3 shows their GDP hitting 6.3 trillion by 2029.
Yeah, but it's more than just the numbers, you know?
What else is there?
It's this unique combination of factors in India, like a rapidly expanding middle class, a young, tech-savvy population.
And a government actually pushing for these alternative investments.
Oh, yeah, like the perfect recipe for this sector to explode.
So it's not just the promise of big returns, but all these underlying things too.
Right, they all feed into each other.
It's cool how India's whole growth story is tied to this rise in alternatives.
Exactly. And the more you dig into this research, you see how things are shifting, like chart 38, how traditional investments are losing their shine.
Like term deposits, that kind of thing.
Yep. People are going for asset management instead. It's a huge change.
Okay, so they're moving away from the old ways.
Yeah.
But where's the money going?
Chart 39 is pretty clear on that. It's these SEBI-registered alternates.
Okay, break that down for me. What exactly are those?
Think of them as ways to pool resources and invest in a wider range of stuff. So there are things like alternative investment funds, the AIFs.
AIFs?
Right, and then REITs, real estate investment trusts, and INVITEs, infrastructure investment trusts.
Okay, lots of acronyms.
No.
But I'm guessing most people haven't even heard of these.
Probably not. AIFs are like funds for experienced investors, high net worth types or institutions, diversifying, you know. Then the REITs, they focus on real estate that generates income.
So you can kind of own a piece of property, even if you're not buying a whole building.
Exactly. And INVITEs do the same, but for infrastructure projects, toll roads, bridges, things like that.
Huh, interesting. So it's like opening up these opportunities to people who wouldn't normally have the cash for those huge projects.
You got it. It's really broadening the investor base. And to show you how big this is, look at Indian AIFs. In just 10 years, their assets under management, the AUM, went from $55.2 billion to $124.3 billion, more than doubled. That's a lot of investor appetite shifting.
Wow, that's impressive. But what's driving it all? Why this huge interest in India specifically?
It's a whole bunch of things coming together, actually. Like, check out chart 49. India's per capita GDP is rising. More people have money to invest.
Right. And I see in section 3.4.2 that they have a high gross savings rate too. So there's a lot of capital looking for a place to go.
You got it. Plus, investors are more informed these days.
Not just blindly throwing money around.
Right. They're realizing that alternatives can offer different returns, different risks.
And they're not afraid to diversify.
Exactly. I see that in sections 3.4.4 and 3.4.5 of the research. They're doing their homework, understanding the benefits of diversification.
Thinking for themselves.
Exactly. And we can't forget about technology. Easy access to info, online platforms, fintech.
Makes it easier to learn and invest.
Exactly. It's democratizing access in a big way.
Tech really is a game changer.
For sure. And it's not just individual investors either. India's got a growing population of high net worth individuals, the HNIs. They're big on diversification too.
Makes sense. Looking for those high returns.
Exactly. Table 15 and section 3.4.12 show how important they are to the growth of alternatives.
So it's like this perfect mix, a growing economy, smart investors, and tech making it all happen.
Yep. And it's not a fad. The government's encouraging this shift, creating a whole framework for alternative investments.
They see it as a key to future growth, huh?
Exactly. It's a really fascinating picture.
But okay, with all this buzz, we need to get specific. Let's break down some of the key types of alternative investments gaining traction in India.
Okay, sounds good.
Starting with Real assets.
Real assets are interesting, they're tangible, they're connected to the physical world, which can be really appealing to investors.
Right, it's not just some abstract thing on a screen. Real estate comes to mind first, of course.
Yeah, that's a big one.
But what else is there?
It includes things like infrastructure, so toll roads, bridges, airports, even resources like farmland, timber.
So it's really about investing in things that have inherent value, stuff you can see, touch, in a way.
We got it.
Why are they so popular in India, though? What's driving that?
Well, India is putting a lot of emphasis on infrastructure development, big plans to modernize, and that translates into a huge demand for real asset investments.
Right, I'm seeing that in Chart 71, this thing called the National Infrastructure Pipeline, the NIP, trillions of dollars in potential investments.
Roads, railways, energy, you name it.
Trillions, wow. And then you add in India's fast-growing cities, the demand for real estate, especially commercial real estate, that's only going to increase.
You're reading my mind. It's all there in Charts 74 and 75 showing that growth.
Right, and this is where those REITs and invites come in, right?
Exactly. They give investors a way to be a part of these real estate and infrastructure opportunities without having to buy a whole building or project themselves.
Like owning a tiny piece of a skyscraper or a toll road network. That's a pretty cool concept.
It is.
Okay, that makes sense. But what about businesses needing funding, but maybe they don't fit the traditional banking mold?
That's where private credit steps in. It's this alternative way for companies to get capital, especially those the banks aren't really serving. It's a lot more personalized and flexible than traditional lending.
So it's a bridge between businesses and investors who want those higher returns, a different risk profile.
You got it.
Looking at Chart 84 here, it shows private credit projected to grow big time in India.
Right, and a reason for that is banks and these non-banking financial companies, the NBFCs, they're focusing more on retail loans now.
So there's a gap in corporate lending.
Exactly, and private credit is stepping in to fill it. It's all right there in Charts 86 and 87.
It's interesting how it's meeting that need in the market.
Yeah.
Okay, so we've got real assets, private credit. What about startups? All this innovation happening. Where does that fit into the Indian alternatives picture?
That's where private equity comes in, especially venture capital. It's all about fueling that innovation, especially with India's startup scene.
It's booming, isn't it?
One of the most dynamic in the world. And alternative investments are a big part of that growth story.
Okay, so I'm seeing in Chart 94 how private equity investment in India has been going up steadily, outpacing private credit and real assets even.
Exactly. And within private equity, venture capital and growth investments are the hot tickets.
Because of the growth potential.
Exactly. Like, look at Chart 98. That's where the real excitement is.
Wow, okay, we've covered a lot. Real assets, private credit, private equity.
Yeah.
It's amazing how diverse this market is. But one name I keep seeing pop up in this research, EAAA, India Alternatives Limited. Who are they?
They're interesting. A leading player in the Indian alternatives market. They've got a diverse portfolio across private credit, real assets, you name it.
So a one-stop shop for investors wanting to get involved in Indian alternatives.
In a way, yes. But Section 7 of the research lays out their operations and some of the challenges they face. It's not easy street.
Yeah, lots of competition, the rules always changing. Must be tough to navigate.
You got it. But their success shows what's possible if you can adapt and stay ahead of the curve. This market is constantly evolving.
It really is. Okay, I think I'm starting to see the big picture here. India's economy is booming. Investors are changing how they think. Regulations are supportive. Technology is a huge factor.
A lot of pieces coming together.
It's creating the perfect environment for these alternative investments to really take off. And it's not just about chasing those high returns.
It's about being part of something bigger.
Yeah, part of a growth story. But with all this potential, what about the downsides? What worries you about this market?
Well, one of the biggest things to think about is the lack of a deep and liquid secondary market. That's a big difference between alternative investments and the stock market.
So it's not as easy to just sell off those alternative investments if you need to get your money out quickly.
Right. It's not like stocks where you can just click a button and sell.
Right.
That ease of buying and selling, that's what we call liquidity. And it can be a bit tricky in the alternatives world.
You might have to find a specific buyer, which could take a while.
Exactly. So liquidity is something to think about. It's not for the short-term investor.
Definitely something to consider. Are there any other challenges, things investors should be aware of going in?
Well, competition is getting fierce.
Lots of people wanting a piece of the pie.
You got it. The Indian alternatives market is hot, lots of players, old and new, all trying to make their mark.
Sounds kind of like a gold rush.
Yeah, kind of. And of course, there's the regulatory landscape, which is always changing. The Securities and Exchange Board of India, SEBI, they keep updating the rules.
So fund managers really have to stay on top of things.
You bet. Flexibility and adaptability are key.
Okay, that makes sense. But let's look ahead a bit. What are the big trends shaping the future of Indian alternatives? What's coming in the next decade?
One of the biggest things is ESG, environmental, social, and governance investing.
ESG is everywhere these days, but what's it like in India specifically?
Well, investors are really looking for opportunities that not only give good returns, but also contribute to a better world.
So it's not just about the money.
Right. It means looking for funds, investing in things like renewable energy, green infrastructure, companies with good social and governance practices.
Investing with a conscience. I like it. What are your thoughts? I mean, you're the expert. What are the opportunities and challenges of ESG in India?
It's a really fascinating area. India could become a leader in sustainable development, and these alternative investments could be a big part of that.
Huge potential.
But there are definitely challenges too, like getting good data, having standardized ways to measure things, making sure ESG reporting is transparent.
Sounds complicated.
It is, but for those who can figure it out, the potential is huge.
Right. Okay, then there's technology. It seems like it's revolutionizing everything.
It really is, and alternative investments are no exception.
So how is tech changing things in India specifically?
Well, for starters, better access to information. Investors have way more data now than ever before, so they can make smarter decisions. And technology is making processes smoother, from due diligence to portfolio management, more efficient, more transparent.
Especially important in India, where getting reliable info hasn't always been easy.
Exactly. So tech is making the market more accessible and transparent.
Great for investors, levels the playing field a bit. But is technology doing more than just making things run smoother? Is it creating whole new investment opportunities?
Oh, absolutely. Think about fintech.
Oh, fintech, yeah.
Alternative funds are investing in these innovative financial technologies that are shaking up the old ways of doing things. Mobile payments, peer-to-peer lending, even blockchain stuff.
Fintech is hot right now. It makes sense.
Right. It's like double the innovation.
Love it. What else?
AI, artificial intelligence.
Whoa, AI in investing.
Yep. It can analyze huge amounts of data, find new investment opportunities, even automate some parts of portfolio management.
That's wild. Is that happening already, or is that way off in the future?
It's happening in now, These AI-powered platforms are getting super sophisticated.
Wow.
In India, AI could be especially helpful for risk assessment, fraud detection, finding patterns in data that are hard for humans to see.
It sounds like the whole Indian alternatives landscape is going to look totally different in a few years, thanks to technology.
For sure. But before we get too carried away with all the excitement,
We need to talk about the risks.
right, we talked about liquidity, but there's more.
Okay, lay it on me.
The biggest thing to remember is that alternatives are just more complex than regular stocks and bonds.
Not for beginners.
Right. They've got complicated structures, specific strategies, longer time horizons. You really need to do your research and understand what you're getting into.
Not something you just jump into without thinking.
Exactly. Investors need to do their due diligence, know the risks for each type of investment, and make sure it fits their goals and risk tolerance. It's about being informed and proactive.
Not just passively handing over your money.
Right. You got to be involved.
What about economic risks? I mean,
Good.
India seems to be doing great, but things can change.
That's always a factor. Downturns, policy changes, global events, those can all affect alternative investments, just like anything else.
So no investment is risk-free, no matter how promising it looks.
Exactly. Got to be realistic.
Diversification is key, right? Like always.
Absolutely. Spreading your investments across different things, including alternatives, can help manage risk. And even within alternatives, you want to diversify different types of investments, different fund managers. Don't put all your eggs in one basket, as they say.
Solid advice. But are there any other things that investors should watch out for, specifically in India?
Well, there's always the risk of fraud or mismanagement. It happens everywhere. So you got to really vet those fund managers, make sure they've got the right controls and oversight in place.
Transparency and accountability are crucial.
Yeah.
Especially in a market that's still kind of new.
You got it. Investors need to know their money is being handled the right way.
It's not just about protecting your investment from shady stuff. It's also about knowing that the people managing your money share your values.
Exactly. It goes back to that ESG thing. It's not just a fad, it's a whole different way of thinking about investing.
Okay, we've talked about the challenges, the exciting trends, the risks. But let's end on a positive note.
Yeah.
What are the big rewards here? Why is this market so compelling?
The potential is huge. It's not just about chasing higher returns. It's about diversifying, potentially lowering your overall risk, and getting in on unique growth opportunities that you wouldn't find elsewhere.
So it's about building a stronger portfolio,
Yeah.
one that can handle ups and downs, maybe outperform in the long run.
Exactly. And if you're passionate about ESG, well, Indian alternatives offer a way to put your money where your values are, supporting companies and projects that are making a real difference.
I love that. It's about making a positive impact. Okay, so with all this in mind, what are your final thoughts on all of this?
It really is about the bigger picture.
Mhm.
With tech like AI coming up, more focus on ESG, and India's growth, I'm curious, what do you think? How will Indian alternatives change in the next decade?
Oh man, that's a tough one. I feel like we're just scratching the surface here. But I can imagine even more innovative ways to invest popping up, driven by both technology and how investors are thinking differently.
For sure.
Maybe AI will even make alternatives accessible to more people, not just the super rich.
That's an interesting thought. I think you're right. The future is bright for Indian alternatives. But just like with any investment, people need to stay informed, do their research, and make choices that work for them, their goals, their values, all of that.
It's not just about the numbers.
Right. You got to be an active participant in the process.
Be in the driver's seat. Okay, so I think we've covered a lot in this deep dive. Started broad, looked at what's driving growth, then got into the nitty-gritty of different types of investments, even talked about the risks.
We really did. Booming economy, changing investment landscape, tech, ESG, diversification, due diligence.
Phew.
It's a lot.
This deep dive has been eye-opening. I feel like I understand this market so much better now.
I hope so. And hey, if you're interested in learning more, check out the research you sent. There's a ton of info there.
Yes. Dive in, everyone. And as always, talk to a financial advisor before you make any big decisions.
Always good advice. Get personalized guidance. Make sure it's right for you.
Exactly. Investing is a marathon, not a sprint. Got to think long term.
Absolutely.
Well, on that note, I think we've reached the end of our journey into the world of Indian alternatives.
Thanks for joining us.
Happy investing, everyone.